What's going on, everyone? Welcome back to Couples Trading Lab. I'm Ray.
And this is Body. This is the daily price action show. We'll be going over SPY and QQQ. We got some very interesting charts for you. And I have something that I think not a lot of traders are paying attention to that is very, very crucial that you are aware of heading into this week because it sets up the ground for what's about to happen within the upcoming weeks.
Let's start with SPY. The bulls continue doing exactly what they've been doing since the April lows, buying every opportunity they get. SPY is now trading around 758 after breaking above the prior consolidation range, and what's standing out is the complete lack of meaningful selling pressure. RSI remains elevated, buyer participation continues improving, and every minor pause has simply led to another push higher. This continues to look like a classic melt-up environment where momentum stays overbought while price keeps grinding higher. As long as institutional money continues rotating into leadership sectors, the path of least resistance remains higher, and the next area I'm watching sits between 760 and 765.
QQQ remains the leader. Technology, software, semiconductors, and AI infrastructure is where institutions continue concentrating capital inflows at the most aggressive pace seen since the dot-com bubble. QQQ just pushed to another fresh highs near 745, and despite RSI approaching 80, buyers continue showing no signs of backing away. This suggests bulls remain in full control despite clear overextension from equilibrium levels. The most impressive part of this rally is how shallow every pullback has become. Sellers haven't been able to create any meaningful damage to the trend structure. Heading into tomorrow, the key level I'd pay attention to for bullish continuation is above 743.10. And if buyers get above 745 and see price acceptance above that, then we can really expect momentum to push towards 747 and potentially 749. Now, if buyers start showing weakness tomorrow and break below 737, which is yesterday's low of the day, then I'd be extremely cautious for a much larger correction back down toward the 20 EMA line to reset the overextension, with 725 and then 722 becoming areas I'd be watching for a larger correction. The reason why this correction is of an importance to me is I'm identifying a bearish divergence that is potentially forming on the daily time frame for SPY and QQQ. The bearish divergence simply indicates that the relative strength index RSI is making lower highs while SPY continues making higher highs. This is usually an indication of a bearish divergence, and price can correct very sharply once certain key levels are broken. For me, looking at QQQ, that level is 737. Below that, we can really start to see some heavy decline.
One area that could become increasingly important over the coming weeks is financials. Wells Fargo has quietly spent the last several months pulling back into the lower boundary of a multi-year rising channel. Instead of breaking down, buyers have started showing up exactly where you'd want them to. The stock is below the 200 daily moving average, so this isn't a confirmed breakout story yet. But momentum is improving, RSI is recovering, and the chart is beginning to stabilize after months of weakness. If financials start participating alongside technology, WFC could become one of the stronger recovery stories inside the sector.
The contract that I'm watching for this particular stock is June 17, 2027, 100 call. It is currently trading at 2.95. In my opinion, it's very cheap given the amount of time that we have, over 381 days before the expiration due date. If you would like something closer, you can get the 90 call that's currently trading at 5.30. Really good opportunity in my humble opinion. The reason why I'm paying attention to the financial sector is that it has been consolidating and digesting while all the other sectors have been advancing and pushing the markets higher. Now, when those sectors start pulling back, the market is going to rotate into the financials. We're going to see WFC, Bank of America. We can see they're holding up really well, forming these inverse head and shoulders that I think are eventually going to see some heavy upside when we do see a rotation outflow from the current market leaders such as the semis, AI infrastructure, and all the other industries that have been pushing the overall market higher. Now let's go over NVIDIA. NVIDIA today pulled one of the nicest and cleanest bear traps we have seen in a while. After earnings, price briefly lost the 20 EMA and created the appearance that a larger pullback was developing. And just like how we have seen over the last 4 earnings, instead buyers stepped in almost immediately a week after earnings, reclaiming the 20 EMA moving average, which is known to be the momentum extension gouge, closing the session at 6.26% gain for the day. Now, if you notice, we did something very similar last time. We pulled back for several days for about a week and a half, right towards the 20 EMA line. We closed below it, and then the very next session, we had a massive demand candle above the 20 EMA line, and this is exactly what we are seeing in today's session. We can see the volume is above the 50-day average, meaning that this move was backed by volume. So heading into tomorrow's session, are we going to see a follow-through confirmation towards 227? If we do see that, then there's a very likelihood of seeing the same thing take place that we saw last month, where NVIDIA eventually works its way back up, comes back to that 236 gap fill area, fills that gap, and then sees new price discovery. The very same situation we did last time, where price broke that 216.57 highs, placed new historic all-time highs. The setup looks really good to me. If NVIDIA does show that confirmation tomorrow for the bulls, there's a great chance QQQ and SPY are going to continue to move higher, given that this is the bellwether of the market, being the largest weight of them all. Lately, I've been seeing a lot of rotation flowing into travel stocks and casino stocks. This particular setup has a bullish falling wedge formation. We retested the 200 simple moving average line, which usually is a solid retest for a trend reset on the larger picture. And now we are also regaining the 20 EMA line, which is a momentum extension gouge for identifying the momentum of a trend. So when you see a stock regain its 20 EMA line, and its 20 EMA line is trending above the upsloping 200 simple moving average line, you can expect an extension higher, and this double bottom on this particular setup can formulate into the rest of this week and close somewhere above 110, which I would find to be very bullish. The contract that I'm paying attention to for WYNN Resorts is March 19, 2027, 135 call at 5.87. For those of you that are not familiar with our strategy, I like to trade these kind of contracts like it's a stock. So if I buy it at, let's say, 5.80 and it ends up going to 10.40, then that's a really good premium increase on a contract that expires in 291 days. This is how I trade these options, and it pays off extremely well for me. That concludes our daily price action analysis.
Do you think SPY continues grinding higher from here? Or are you waiting for a larger pullback before becoming aggressive?
Leave a comment down below. We really enjoy reading your comments. And not only us, but others also enjoy reading your comments to feel what sentiment is like in the market, what everyone is thinking. And most importantly, it helps push us towards other viewers as well, recommends us to other viewers, and that greatly helps our channel. Thank you so much for watching this video. We'll see you in tomorrow's daily price action show.